Have you ever wondered where the concept of mutual funds originated? Well, let's take a journey back in time, all the way to the Roman Empire. It's here, amidst the grandeur of marble columns and gladiator fights, that the first seeds of fund management were planted. In a time when military might ruled the world, the Romans came up with a novel idea: pension schemes for retired soldiers. Yes, you heard that right. The Romans, in all their wisdom, recognized the importance of providing for those who had served their empire. This was not just about gratitude, it was a strategic move. By ensuring their soldiers' financial security in retirement, they guaranteed a steady supply of willing and able recruits. And so, the first pension schemes were born, and with them, the rudimentary concept of fund management. Now, fast forward a few centuries to the Middle Ages. The world had changed, but the need for financial security had not. This time, it was the guilds that took up the mantle. These medieval associations of craftsmen or merchants were the precursors to modern corporations. They began to offer benefits to their members, pooling resources to provide support in times of sickness or old age. Just like the Roman pension schemes, these guild benefits were a form of mutual aid. Members contributed to a common fund, knowing that they could count on support when they needed it. And as these funds grew, so did the need for someone to manage them. Thus, the role of the fund manager was born. So you see, the concept of mutual funds isn't as modern as you might think. It's a centuries-old idea, born out of necessity and refined over time. It's a testament to our collective desire for financial stability and security. So, the seeds of mutual funds were sown in the Roman Empire and nurtured in the Middle Ages. Is it not intriguing that the concept of mutual funds as we know them today was born out of a financial crisis? Our journey takes us back to the 18th century, a time of economic turmoil in Europe. The Dutch and Scottish economies were under immense pressure. The South Sea bubble in Britain and the Mississippi Company bubble in France had just burst, and investors were left with heavy losses. The need for a solution was palpable. Enter the investment trust, a novel idea that emerged in the Netherlands and Scotland. These trusts pooled together resources from various investors, spreading the risk and potential for losses. It was a simple yet effective concept. Don't put all your eggs in one basket. This marked the genesis of modern mutual funds. Fast forward to the early 20th century. The United States, a vibrant and bustling economy, was yet to fully embrace this European concept of collective investment. All that changed in 1924 with the establishment of the Massachusetts Investors Trust. This trust was the first of its kind in the US, pioneering a new era of investment strategies. It offered the American public an opportunity to invest in a diversified portfolio. The fund started with a humble beginning, but within a year it expanded its assets from $50,000 to almost $400,000. The trust's success was not just a testament to astute financial management. It was a reflection of a changing mindset, a shift towards shared risk and collective wealth. It was a beacon for the everyday investor, signaling that they too could participate in the financial markets, previously a playground for the affluent. The Massachusetts Investors Trust set the stage for the proliferation of mutual funds. It was the spark that ignited a revolution in the investment world, a revolution that continues to this day, shaping how we manage and grow our wealth. Thus, mutual funds were born out of a need for financial stability and diversification. Their evolution is a testament to our ability to adapt and innovate in the face of adversity. It's a story of resilience, ingenuity, and the power of collective action, and it's a story that continues to unfold. Did you know that the evolution of mutual funds has been a journey of innovation and adaptation? Now let's dive into the fascinating world of how mutual funds have evolved over the years. In the beginning, there were only a few types of mutual funds, primarily focused on equities or stocks. But as the financial markets grew more complex, so did the types of mutual funds. Bond funds were introduced, allowing investors to pool their money to buy a large number of bonds, thus diversifying their risk. Then came money market funds, a type of mutual fund developed in the 70s as an option for investors to park their cash and earn a small return with a very low risk. These funds invest in short-term, high-quality securities from governmental entities, financial institutions, and corporations. The 80s saw the birth of index funds, a type of mutual fund or exchange-traded fund, ETF, with a portfolio constructed to match or track the components of a financial market index. The beauty of index funds lies in their simplicity and cost-effectiveness, as they passively follow the market index, eliminating the need for costly fund managers. As we moved into the digital age, technological advancements have made mutual funds more accessible and user-friendly than ever before. Now you can buy and sell mutual funds with just a few clicks or taps on your smartphone. Online platforms and robo-advisors have made it easier for individuals to start investing, even with minimal knowledge and capital. Innovation didn't stop there. The introduction of exchange-traded funds, or ETFs, in the 90s revolutionized the mutual fund industry by combining the diversification of mutual funds with the flexibility of stock trading. Today, there are thousands of ETFs tracking everything from traditional market indices to niche sectors and themes. From the first mutual fund in the 1920s to today's diverse range of options, mutual funds have continually adapted to meet investor needs. The evolution of mutual funds is a testament to the financial industry's ability to innovate and adapt, providing investors with a multitude of options to grow their wealth. So, where do we stand today in the world of mutual funds? We find ourselves in a dynamic era where technology has a powerful grip over mutual funds. Algorithm-driven trading, robo-advisors, and digital platforms have transformed the way we invest, making it more accessible than ever. Moreover, the trend of sustainable investing is on the rise, with more investors conscious of their impact on society and the environment. Despite the challenges of recent financial crises, mutual funds have shown resilience, bouncing back from downturns, proving their versatility and reliability. They've adapted to meet the needs of diverse investors, offering a wide range of options from conservative income funds to aggressive growth funds. The landscape of mutual funds is continuously evolving, driven by technology, market trends, and investor demands. As we look forward to the future of mutual funds, we can be confident that they will continue to evolve and adapt, just as they have done since their inception in the Roman Empire.